friends, good morning and welcome to yet another edition of the MultiMillionaire Forum. This is March 2025 edition. And for those who don't know about the MultiMillionaire Forum, what we try and do here is every month we bring up one currently trending topic or an idea. And we put together some research, we share some information. It's purely knowledge-based. There is nothing in terms of product recommendation or a tip or anything like that. But it's just a place where you can come, learn a few things, share a few ideas, and enrich ourselves and have a great weekend. So that's really the idea. So what we intended to do this time in this particular show is that, there was something which Economic Times covered very recently, earlier this Monday itself. That was the Monday of the 24th of Feb. And what they did was they covered a little article saying the best fund managers of 2024. So they sort of made a little bit of a presentation, and we will do something similar, but we will try and decode that a little more for all of us, so that we get a better understanding of exactly who is this fund manager, what is this fund manager doing. This was, by the way, the papers that came. So you can even grab a copy if somebody wants. They can ask us for the original copy. We can even send you a PDF of that. So that's very, very easily possible. So there are these 10 guys who spoke about something very interesting, and they spoke about the views that they have in the market right now, and they also spoke about the lessons that they learned. So we thought, why don't we try and dig into it, make some correlations, figure out something, and we discovered a lot of interesting facts, which I will all share with you in the next 20-30 minutes or so. So let's move on. So here is our first ranked number one. I mean, a lot of you must be aware of Parag Parikh Mutual Fund. So Mr. Thakkar is the CIO, the Chief Investment Officer of this fund house. And what we are doing is we've done this presentation and we put together this little research in two parts. Okay, so one part is this presentation where you can say, so this is exactly a snapshot of exactly the article that came in the newspapers. Okay, so what we've done here is we have taken each piece here. So we are going to talk about my reading of the market scenario. So each fund manager was asked, what do you think about the markets? See, the markets have had a crazy sort of a run, right? Over the last 2 years, 23 and 24. But in this year, it's been really, really a very, very difficult sort of a time. And yesterday was one of the craziest days that we've seen. And not only that, like I was mentioning a while ago, in the history of the last 29 years, this is the first time 5 months is continuous negative returns of the market. It's never happened in the last 29 odd years. So something different is happening. So what these managers were asked to do is each one of them is asked, what do you think of the market? And they've given some answers. So this little paragraph here, this little piece here, where exactly the journalist has reported the reading of Mr. Thakkar here. And what we have done here in this little call out that you see here is that we have tried to make a little summary of whatever he has said. Okay, so that's the procedure. And then the second part of the presentation is these lessons that he has learned. These biggest lessons that this fund manager has learned in the last few years. So what has been his own take? What has been his biggest learning? And we will see if we can learn something out of that. Very, very great, nuggets of wisdom here. So the second part is going to be even more interesting. So having said that, this is how we are going to do. We will first go through all the 10 awardees, all the 10 top ranked fund managers, see their reading of the market scenario, okay, summarize it, and then we will come to the second part. Okay, so that's how we are going to do this little session. As usual, this is purely educational. There's no tips, etc. There is no product recommendation. We are not even recommending or promoting any of these funds. This is all for the compliance point of view that I need to mention every time we do anything that goes out in the public media, right? So let's get on with this. So there is a lot of things that he's talking here. Let me give you an example. I will just read out one or two examples for you. He says the valuations of the Indian stock market have been elevated for a while. Okay. The fall in the stock. Okay, now let's decipher this. have been elevated for a while. See, the language of these fund managers is very sophisticated sometimes. But I mean, very simply put, he's saying that the market is overvalued. It's very high, highly valued, or market is very high. Mehenga hai sab kuch. That is basically what कहना चाह रहा है. The fall in the stock prices in January 2025 have improved things a bit, but stocks continue to be expensive. So he's saying the same thing again, but in a different sentence, that by market mehenga hai. There are pockets of undervalued stocks and pockets of exuberance. मतलब क्या कह रहा है कि there are some good companies, some bad companies. So that is something that we've always known. Okay, small and mid cap valuations are steep. ये तो पिछले 2 साल से everybody is talking. So every fund manager, even regulator is talking about it, that small and mid caps are expensive. Even garden people who walk with you in the garden in the morning, your friends, everybody's talking small cap and mid cap is expensive. And he's saying also that there are some pockets of opportunities, right? So that's the third thing he's saying. And the last thing he's saying is investors should moderate their return expectations over the next 1 or 2 years. Okay, so these are the 4 things that they are saying. Now, what I have to request you here is it's going to be slightly different, this presentation here. Okay, what's going to happen here is you may feel this is a little bit of a monologue, and I'm going to go a little fast. I am not going to give a conclusion whether good or bad, and it's a little game that we are going to play. We are about 20 of us here. Read what each person is saying. Okay, just pay attention to that. It will take about 5 to 7 minutes. We'll cover these 10, and then we'll do a summary of all of them. And then this time we are going to do a little different thing, because we're not going to wait right to the end. We are going to have a little conversation for about 3-4 minutes as soon as we finish part 1. And then as soon as we finish part 2, we'll again have a little bit of conversation. Okay, so bring the presentation back up and bring Mr. Thakkar's page up. All right, so this is what Mr. Thakkar had to say. In all this language, all he's saying is कि भाई, some parts of the market are expensive, moderate return expect करना, थोड़ा सा बाजार महंगा है. That's all he's saying. Okay, next. So he's got the first rank, by the way, and he used to manage a fund of some 90,000 crores. So these guys are very intelligent, and they're the foremost managers of the country. Okay, so थोड़ा सा बनता है that we listen to what they are saying. Anyway, but like I said, we'll do a conclusion analysis later on. Acha, this is number 2. He is from Motilal Oswal. Okay, and well, by the way, this little thing here is the funds that they manage. So they talk about this little box here in the article, talks about the kind of funds that he's managed. So what is he talking about? He's saying mid cap and small cap is high. This sentence saying the same thing. It will continue to remain under pressure till the time valuation reset doesn't happen. See, this language is very complicated. These guys speak in a very, very intense kind of a language. It's a language that almost, makes even financial people nervous sometimes. But well, that's how they speak. So, the market correction is temporary. Okay, thankfully that's an easy to understand line, and will improve valuations, offering investors a great long-term entry opportunity. So our friend Mr. Jain also said this sometime back here, that I'm a long-term investor. So what is he saying? Market mehenga hai, correction is temporary, and investors should invest for the long term. So all this language is saying basically this. Next. Okay, just clear my annotations first. So here our friend is saying, look at this. Look at this language. The market is adjusting downwards as earnings normalize. With the last year's excesses largely corrected, we expect earnings to align with low to median teen consensus estimates by 26-27. मतलब क्या बोल रहा है कि भाई market is expensive और correction हुआ है. पिछले 2 साल में rally हुआ था, अभी correction हो रहा है. Always correction is temporary. Valuations have gradually started falling in some parts of the market. So some opportunities emerging. That's also what he's saying. Next. Okay, these again, for the ones who are just about joining, we are doing, and I just want to do a quick little recap. I think I saw him joining. We're just talking about what some of these fund managers who are the best fund managers of India, what is their reading of the market scenario. So we are trying to analyze their complex language into something very simple, trying to see what they are trying to say here. So now here, he's saying global uncertainties hai, protectionism hai, high valuation hai, etc. But basically what he's saying again in simple terms is overall valuations high, expect moderate growth. He's saying, limited scope. Look at this language. And there is limited scope for fiscal and monetary policy stimulus in India. Very simple. There is no stops for the government, and globally there is uncertainty, right? Okay, next. Okay, what is Mr. Padiyar here saying? Now, he is from Tata Mutual Fund. See, these are the biggest names in the country. Again, what is he saying? The market has shifted from extreme optimism to heightened caution, driven by global uncertainties. He's saying the same thing now. Globally, the environment is uncertain. Okay. We believe valuations have selectively become reasonable in various segments, etc., etc. So he's again saying the same thing. The valuations are high, correction is temporary. Okay. And look at this thing. We see rooms for earnings of double-digit growth from 25, 26 hours. Means, achhe din aayenge. Basically, that's what he is again trying to say. Okay. Next. This is rank number 6 here. Okay. Now here he is saying again, we have seen significant amount of liquidity come into the equity market, driving valuations across the board. But he's saying that market महंगा hai, valuations are high. Okay. I believe some of you might be smiling by now. Whatever, the way I'm saying this thing. Expect returns to be moderate. Again, this is what says expect returns to be moderate. And here he's saying small cap, some of the valuations have been, the froth has gone out of the market. So basically he's saying small cap and mid caps were expensive. Okay, next. Okay, Mr. Kalawadia. So he's from ICICI. What is he saying? Uncertainty in global uncertainty. Again, he's saying the same thing. Trade practices will keep volatility benefits long-term investors. They should adopt dynamic allocation. Basically, you should diversify. That's what he's saying. Investors should invest for the long term. Valuations are high and global uncertainty. We have underlined, all these things. You can read this article in detail. You will enjoy. Maza aega. But the summary of number 7 ranked manager saying this. Next. Okay. In all this, my goodness, look at this language. Our in-house asset allocation model, which applies to the Nifty, shifted neutral in January from a 60% underweight position against a 50-50 debt equity benchmark. Within the market, we are negative on the lower end of the capitalization curve due to its significant outperformance over the last few years. My God, I tell you, even the financial people in this world will not understand what, Mr. Srinivasan here has said. Okay. And he is from SBI Mutual Fund. Such complex language. But what he's trying to very simply put say that, friends, small cap and mid cap is highly expensive. That's all he's trying to say in this. Okay. Next. Number 9. He says market have corrected, broader opportunities have arisen. So same thing he's saying, pockets of opportunities, correction is temporary. Investors should invest for the long term. Next. Number 10. Mr. Paharia. He's from Union Mutual Fund. Language again. Large caps are attractively priced, while mid caps and small caps are trading at rich valuations. It's very simply put, small cap and mid cap are expensive. It's high. So that is again what he's trying to say. Okay. Now, presentation closed. Okay. So now, did you observe? You can unmute yourselves. Okay, let's take a quick reaction. What did you make out of most of the people? What did you make? What is your first reaction? I showed you 10 top-ranked fund managers, and in their complex language, they're trying to say something. We simplified it for you. What are your top reactions? Anybody? Everybody's mics are unmutable. What are some of your top reactions? Anybody? You can open your mic and just share a word or two.
Yeah, maybe I think the optimism should be slowing down and we should have a balanced approach.
Yes, fair enough. Okay, we should have a balanced approach, something like that. Okay, put the presentation up again. Friends, anybody else? Any comment?
Nobody knows the valuation still high or no.
Sorry, Maharji, kya kaya
aapne? Nobody knows. Nobody can evaluate still the valuation is higher or not.
Yes, ठीक है. Maharji, ये चीज देखिए. Friends, look at this. Okay, what is this? I mean, what is this exactly saying? What is the title of this section? My reading of the market scenario. Okay. So what the journalist is trying to ask him is, bhai, what is your view on the market scenario? What is your view? And what is the answer that we are getting? So I'm not being a little critical about fund managers and their intelligence here, but having said, one second, just, yeah. What is the subject here? The subject or the question that you are being asked is, what is your reading of the market scenario? This is number 10. Now go slowly backwards. Go backwards. What this guy said, small cap and mid cap is high. Go backwards, and we're going to go fast forward. Can you go backwards, please? Go up. Okay. No, not so fast also. Not so fast. Okay. Same thing. This guy, why we have made this little different diagram here. Now, he is saying that earnings cycle to gather momentum towards later half of 2025. So Mr. Badshah here is saying, and this parallelogram basically means he's giving some opinion here that later half of 2025 maybe things will improve. That is really the scenario of reading. My point is, market is corrected. Can't you and I see that market is corrected? There are pockets of opportunities. What's new about it? There is always pockets of opportunities. Investors should invest for the long term. Some of you have been with me for the last 20 years. This is what we always say. Invest for the long term. Today also we'll say the same thing. 20 years later also we'll say the same thing. And so the fund managers will say the same thing. Okay, go to number 8. Okay, small, mid cap, high. Go back. Okay, what are the guys? Did you notice that global uncertainty, valuations are high, investors invest for the long term, etc., etc. Now take us to the summary. Okay, take us to the summary of what all these people are saying. So you know what, friends, we did a little bit of research. These 10 top fund managers of India, the most intelligent people who are running, lakhs and crores of rupees of fund. Out of these 10 people, 6 of them said the market is overvalued. Okay, so market is overvalued. I mean, humko bhi dikhai de raha hai that the market is overvalued. Market is run up so much. 5 of them have said small cap and mid caps are high. 2 of them are saying pockets of opportunity, which is always there. 3 people are saying expect moderate returns. So who tells you that please come to the stock market? Has anybody ever told you that you can expect 45% return? Who talks like that? Nobody talks like that. We all talk in terms of, and if you heard me also saying, mutual funds, please expect 12 to 14%, 15% return. Stocks and direct equity, maybe 20% kind of returns. So we all expect moderate returns. Nobody thinks, oh, that we are going to make 75% next year, or we are going to make 125% next year, so on and so forth. We all know that we have to invest for the long term. We all know that corrections are always temporary. We've seen that so many times that correction comes in 6 months, 8 months, markets go down, and then things move up. No stops for the government. Only one guy said it, but we all know, living in India, that we don't have any social security. There's nothing that the government is, given us, because the government can't afford to do it. We are not like, like a Sweden or a Finland or a Scandinavian country where even if you're paying 45% taxes, you get all the benefits that you can possibly dream of. And global uncertainty, 3 people are saying. My submission is, friends, some of the smartest minds of India are telling us something repeatedly, but nobody really has stood out and given a real market scenario, a view, a direction of the future, except some of those 2 or 3 people whose names are there in that parallelogram. Okay, where they're giving you some indication. Most of them are talking about the current state of what it is. Again, let's refresh everybody's memory. Bring that presentation and show us that. Friends, what I'm trying to tell you here is we have a lot of information. Go one slide back. We have a lot of information that media feeds us, that we consume. So my reading of the market scenario. So what I personally felt, my opinion was, my reading of the personal scenario. So everybody's reading is this, but that is the reading of you and me also. And I would have been happier if the fund managers gave us something, more insightful, frankly. So that's my take, and I'll hear from you what your opinion is. But now let's go again to slide number 1, and now let's talk about some of the biggest lessons that they have learned. This is beautiful, okay? This is really priceless information. This is superb. So what does Mr. Tucker here say? I mean, you can't help it. I mean, the language is a little complex, But in this complex language, what they are saying is very, very important. So in this whole thing, what he's basically trying to say is, please do your own research. Okay. Now, see, please understand, he's talking from the point of view of a investor. A fund manager always has to talk from the point of view of the investor. The broker or the distributor is just there, by the way. This is how the current state of affairs is. But this is what you should do, because the communication is always directed to the investor. So it's not that, they never tell you, please talk to your broker and see what he has to say. Unfortunately, that doesn't happen. But this is how it is. And this is how, again, an example of how we should consume media. So he says, do your own research. Okay. I'm not going to go into the details of the text, but he says basically do your own research. Okay. Next. I mean, all this complex language, but what he's trying to say is, you should always have a framework and a discipline in the way you're going to do. So, for example, if you're going to invest 100 rupees, then, and if you're going to buy 5 funds, maybe you want to put 20 rupees in each fund. Maybe, if you're going to buy blue chip funds, you should have 30 rupees in that, and the rest should be 20. But in all market scenarios, you should have the same sort of discipline, the same sort of framework. That's what they're trying to say. What he's talking from a fund management point of view is, you should also, if you're buying stocks, you should also know when to sell. But then at the same time, you should have patience. Something very honestly that this gentleman mentions is, please acknowledge a mistake. If a mistake has happened, acknowledge it, change it, move on. So some great insights. And I'll tell you a screenshot. We summarize it all for you. So this is some very, very interesting stuff that these guys are talking about. What he has seen here is that, all markets are basically interconnected. So one way or the other, whatever is happening in America, India is not going to be isolated. For some time, it can be different, but otherwise it's isolated. There's something very interesting that he's talking, that business cycles have become shorter. So earlier, what used to take maybe 5 years and 7 years, let me explain this thing a little better. So there is a new product which gets introduced. By the time the new product, is launched in the market, there's a pilot that is done. Then, there's a maturity phase of that product. The product stabilizes. I mean, it applies to a service also. And then over a period of time, people start, using that product as service. And then sometime it becomes really very successful. And then after a point of time, there are new products that come in, new competitors come in. They get better products, replacement products. And that product starts dwindling in its excitement and in its use to the consumer, because the consumer has found something better. Okay, very simple example is, there was a time where everybody used to use iPhone 4. Today we are at iPhone maybe 15 or 16. Sorry, I lose count. But obviously this technology is better. So that means people have started lesser using of that product. But this is the same company. Let's say if their company was different, and that's how things would change. What basically this means, the business cycle is becoming shorter. So a product comes in, becomes popular, and by the time it becomes unpopular, that time frame is dramatically reduced, which means these guys have to keep churning the portfolio, doing something different. They have to keep churning for the positive impact to bring better companies into the portfolio, etc. He's seeing a lot of retail participation. He's also seeing there's a lot of money flowing into venture capital kind of projects. So there's a lot of money flowing in there. That's what he has learned. Mr. Goodman is giving us a very, very good piece of information, saying be flexible and track everything. Again, see, remember I said that everything is directed to you, the consumer. So from your point of view, okay, this is what needs to happen. The presentation's not visible, at least I can't see it. Okay. So from his point of view, he says that be flexible. You have to track everything. If you have to manage your own investments, you need to basically look at interest rates, forex, economy, inflation. You need to do all of that and more. That's his take. Next. What's interesting is none of these guys tell you biggest lesson from recent years. The last 20 years, I've observed that so many, mutual fund brokers, mutual fund distributors, they have handheld so many investors for so many years together, and they have multiplied their money over the years. I mean, there's no talk of all this kind of stuff, because everything is directed to you. So Indians have started thinking global. Global investments are coming to India. That's what Mr. Padiyar has to say. I mean, I don't think there are great learnings here, but anyway, that's his learning. So again, this fellow is talking about boom and bust cycle being very fast, but he emphasizes framework and discipline. See, that's something that we've also been talking all along, right? That you can't be overexposed in one particular area. you can't go crazy. I mean, small cap is doing well, so chalo, let's put 80% money. Or, we also don't do that kind of stuff. And I think nobody does that kind of stuff. But it's nice that he has learned this thing. And okay, there's something interesting which we missed out. Resisting FOMO. I mean, this is a very, very commonly used term of people in the current sort of generation, resisting FOMO. Basically, fear of missing out, FOMO. So he talks about you should not worry about FOMO. It's okay. There'll always be opportunities in the next time around. Okay, let's move on. This Mr. Kalavadia says long-term investing always wins. Now, that's his biggest lesson learned, but okay, we also know. Asset allocation, that's a great thing. And again, he's emphasizing on framework and discipline. Next. Again, he's talking about, the re-rating. I mean, very complex language here. Again, re-rating of this value occurs when returns revert closer to the cost of equity. It basically means that boom-bust cycle. He's talking about that, and another colleague of his just said that their cycles are sort of shortening over a period of time. Okay, next. Mr. Badshah is here saying that markets are completely irrational. I mean, that's what he has learned. We've also seen that. I mean, there's nobody who could have predicted what happened in this last week, and especially yesterday on 20th February. It was absolutely like a catastrophic day, and everybody was just hoping and praying that, it becomes 3:30 quickly so that we can, salvage ourselves from the pain. Because right from morning, the market was just falling for the whole day. And I don't think anyone's going to forget, especially people in the market are going to, forget about this day for a very, very long time. But again, Mr. Badshah, your talks about framework and discipline and the way you are managing things. Next. A lot of pointers came out of this, Mr. Paharia's lessons learned. Markets irrational, diversification, some cash is always nice, right? You should always have some powder dry, because when the markets are down and when you have an opportunity that comes in front of you, if you have the cash, it's great. Now, these things are like a little bit of a reminder, right? We also know this, but we forget about it. And, a lot of us are fully invested in the markets all the time, and we forget to leave some cash aside. So when the markets are down, okay, we see our investments going down 20-30%. But when that opportunity occurs, we actually don't have any further investment to invest. So we don't have more money to put in. So it's always nice to have a little bit of cash. I mean, SIP is a great thing. So continuously, that is new cash that is always available. But if there was a larger piece, maybe a 10% of your overall net worth, if that kind of cash was available, it would be a great thing. But I know it is rationally not possible to do that. But then that's the time one has to go back to the drawing board, start figuring out which is that investment which has matured or which is likely to mature. Can I do a premature of my fixed deposit? Can I generate cash? And there are lots of ways of doing that. We've also done some articles on this thing, which we can share with you. Long-term always wins. He's talking about how history repeats itself again and again. Very important. We forget this thing. And he's talking about boom and bust cycle. But let me talk about this history repeating itself again and again. And this is something that we also observe as we are looking at in the markets from time to time. The same sort of pattern keeps repeating. I remember telling my team earlier, a couple of months back, and this was in September of 24. And I said that, see, we didn't know it was going to fall, but it started falling. And spookily enough, 3 years back in September, October of 21, it was again falling. Then it fell for a little while, came back up, and then started falling again. So when we started comparing the pattern of 21 and 23, it was almost kind of identical. Now, which is actually good news also, bad news also. Good news that we could identify it. Bad news because that September 21 fall went on and stayed for 18 months. And the market actually had the new rally, which began only in the April of 23. So from September 21 to April of 23, 18 months elapsed in that time period. I hope something similar does not happen. But also from our little analysis, it took that 18 months period. 18 months has been the longest period. And the shortest period has been about 6 to 8 months time. So 6 months is already sort of getting over. If you look at September, then 6 months are getting over. And Feb, if you look at October, then obviously we have yet another month of maybe a downward or a sideways kind of a market. And maybe things would improve a little bit after that. So let's look at the summary of what all these managers learned And that's the screenshot that you may want to take as well. Of course, this is going to be on YouTube also forever, so it's not a problem. But this is some great stuff that, these guys have given us. It's nice to keep looking at this again. And there is nothing in this which you generally may not know. I mean, what is it that you don't know? Patience, retail participation, business cycles are shorter. I mean, there is everything and more that you know. But it's just nice to read it again. The moment you read it again, and every time you read it again, it just sort of helps. And see, the scores are quite interesting here. 1 out of 10, 2 out of 10. And that's the beauty of this. Different people, you ask 10 people, what have you learned? Everybody comes out with different answers. And we have, out of those 10 people, they have created 20 answers for us here, which is absolutely brilliant, right? So I thought, when I was reading it, I thought this was a great sort of, little coverage from the media. But the good and the not so good, I thought we should cover both these things together. And that's why we, put down this little presentation for you. So with that, what I want to do is I want to stop my conversation.